Today's video is on how to scale your income up safely using TSLY and Cornerstone. Yesterday's video was on how to start using margin even with higher margin rates. Today's video is on how to scale up that income safely. We earn over 100,000 per year in dividends at this channel, and you can do it too if you just learn how to use margin to your advantage. So in my account, you see I have a $400,000 account, but for every $1 you put in your account, you get $4 of purchasing power. That's how it works at a brokerage house. For every $1 you put in, you get 4. I just use a fraction of this number to get extra income out of my holdings. So we're also up 32% for the year. The Dow's up 3, the SP's up 13, and the Nasdaq's up 28% for the year. So we're beating all indexes using my margin-based approach to get extra income out of my portfolio. Even on Friday when we were down 4,000, which seems like a lot to people, we're really only down 0.58%, which is all that matters when you're playing with scale. NASDAQ was down 0.68. So we're beating the NASDAQ once again, staying in between the NASDAQ and S&P, which is ideal for my portfolio. If you need help using margin, email me for my e-guides at aikentodd48@gmail.com. So I'm going to be using Cornerstone and TSLY in today's example on how to scale up your income safely. Now, you have to be aware of some things first when you're scaling up your income. And basically, the word of the day is going to be maintenance. Now, when you have funds like TSLY, which are a lot of fun, okay, these income funds, they have high yields and they're a lot of fun, but they have a drawback to them. First of all, they're not completely indexed like Cornerstone is. TSLY is just one stock. But Cornerstone is indexed and it has lower maintenance. That's the secret to living out of your account financially free. Because you see this purchasing power of $640,000. For every $1 you put in your account, you get $4, yes. But you also have this available for withdrawal number, this $132,000 in equity that I have. Okay, you have to keep your eyes on that number at all times because that's what you withdraw out of to live financially free. I have $272,000 in margin debt, and I'm not worried about that because my interest is so small. I'm not worried or affected by the interest like other people would. And if you have really high interest rates, like I said in the last video, then you just use smaller amounts of margin. But once you get comfortable using margin and you build a rapport with your broker, you can then negotiate rates down like I negotiated my rates down to about 5%. And again, I did this with having a large account size, trading frequently, and having a good rapport with my broker. And then I negotiated down. I told him, hey, I want my margin rates lower. I built some credit for a while. I showed them what I was doing with my account. Then they eventually lowered my margin rates for me. So the thing about it is, though, when you want to scale your income up, you have to be aware of maintenance. And TSLY is 50% maintenance. So I love this fund. I love that it has a 60% dividend. We're up pretty big on the position. And I want to put more in it, but this is why I don't put more in TSLY. See, as we go into TSLY's stock, you'll see that it has a whopping huge dividend, yes, and it's had a big move up. It makes some people want to put their entire account in this stock alone, in this fund by YieldMax. But this is why you can't do that. The reason why is because not only is it not indexed and it's one company, so you can't just have all of your account tied to the fate of one company, but it has 50% maintenance. 50% maintenance, okay? That means that for every $1,000 I put into TSLY, it takes up $500 of my equity. That's huge when you're trying to live financially free out of a brokerage account. The secret is maintenance to getting ahead, okay? Not only do you want extra income, not only do you want to tie your investments to the indexes, but you have to buy low maintenance names. Cornerstone is one of my favorite names, and I'm going to show you why when it comes to maintenance. But first, let me just show you why it's my favorite without maintenance, because I found a lot of other low maintenance names in here. Why is Cornerstone at the top of the list? Why do I have 400 grand in Cornerstone? Because Cornerstone, you see this market price of $8 and $7. Cornerstone takes its dividend of 21% per month, a 21% dividend per year, pays you monthly, and it reinvests that 21% dividend every month down here at 649, 679, 671, 654. These all turn out to be 24% gains, 24%, 21%, 19%, So these all turn out to be in the area of around 20% gains. 649, 25% gain. So that's the NAV price, 649, and Cornerstone drips your dividends, your 21% dividend every month, not at 8, not at 7 here, but at 6. So that's how I'm getting those outsized double-digit gains every month. Plus, I'm getting the 21% dividend compounded at 21% every month. And then thirdly, I'm getting days gain potential, which you saw Cornerstone was down Friday, but that's because the indexes were down Friday. In fact, Cornerstone matched the indexes perfectly. The S&P was down 0.37 and Cornerstone was down 0.37. It's rare that they match that identical to each other, but that's why I like Cornerstone, because it has a 21% dividend and it drips the dividends at the NAV, okay? And so I've talked about this numerous times on my channel, and many of you are aware of why I love Cornerstone. You might be rolling your eyes right now saying, oh gosh, he's talking about Cornerstone again, but you can't talk about Cornerstone enough, okay? It's a 4-star fund, and it gives you huge returns monthly, daily, and on a year-to-date basis it is too. And yearly it averages a 30% premium to NAV, so that you can't take lightly. The S&P averages 7% gains per year. This averages a 30% gain per year. I should say 30% premium to NAV. Look at this chart. Obviously, it doesn't look like it's gaining 30% per year. That's because you have to learn how to play Cornerstone. It has its rights offering every year, or mostly every year, so you have to get in and out before that rights offering announcement. That's what I specialize in with Cornerstone. I have e-guides on Cornerstone if you're interested in how to play it. Not only on how to play it before the rights offering, not only on how to get that special drip because you have to call your broker and ask for it, but in my e-guide, I share with you how to maximize your position with Cornerstone to where you can get 50% plus gains out of this position. I even have videos on it on my wall if you want to go check out past videos on Cornerstone. But here's the real secret to Cornerstone. Are you ready, guys? The secret is, I'll go ahead and trade. I'll go to trade so you can see this number very clearly. The secret to Cornerstone is that it is 30% maintenance. 30% maintenance. So yield max is 50%. So if you wanted to even go a little conservative with yield max and buy not just the Teslas of the world, but maybe you wanted to buy some Apple, because Apple is 10% of the NASDAQ and a huge part of the S&P as well. So you put a lot of your money in Apple and maybe a little bit of Tesla because you know that it's really volatile, so you don't want to put too much in Tesla, but you anchored your portfolio around Apple, and rightfully so, because that's what the indexes are anchored around. Well, if you did that, you'd still be you'd be in danger of a margin call, and you wouldn't be able to live financially free because it has 50% maintenance. That means, again, for every 1,000 you put in your account, it takes up 500 of your equity. So for me, I cannot have this happen, okay? For me, I have to also live financially free. A lot of you guys just have a job, and maybe you actually could buy nothing but Apple and Tesla because your job takes care of your expenses, and you just withdraw out of your paycheck, and your brokerage account or your IRA or your 401k just grows uninterrupted, and that's how you want to do it for retirement. But I believe in the highest truth of living at my channel, and my portfolio reflects this, and I don't like to wait until I'm 70 to retire and collect my 401k money and live out of that. I want to live freely now because time is money. I don't want to wait till 70. That's too much time wasted. So I have Cornerstone and all these positions in here optimized from highest to lowest in my positions here. You can see on the top right, Cornerstone's 400,000, but then I have all these others that taper off, okay? They taper off from highest to lowest maintenance, okay? So yes, I want the Teslas of the world. Yes, I want more Apple. Yes, I even want some OARC because OARC's been doing really well for us. It has a 30% dividend. We're up 6%. Of course, I want more of this. Kathy Wood's funds are a lot of fun. You don't want FOMO. You want to be in all those new tech funds that move like crazy every day, don't you? You don't want people telling you that they were in it and you weren't. So you want to have all these funds, but you have to check your ego. You have to check your emotions. For example, FOMO, you have to check that because you have to live financially free, don't you? Again, if you're living out of your paycheck and this is separate and you're waiting to collect all this when you're 70, maybe you can engage in such practices, worrying about FOMO, wanting to participate in things just because others are in it. But for me, I can't have that emotion derail me, okay? I have to just get a little bit of OARC, a little bit of TSLY, and say I'm fine with it. I got 10,000 exposed in TSLY. I'm fine with that. Plus, I have some OARC, which has TSLY in it. It's a 10% of its holdings. Plus, I have a put sold on ARKK down here, as you can see, which gives me that other performance. I got $1,400 for selling that put, but it gives me that extra long performance because I couldn't get it outright through OARC. I mean, I would have had ARKK in here, but ARKK doesn't pay a dividend, so I can't have that in margin. And even without margin, even in 2022, without margin, had you held ARKK, you would have been hurt and not seeing any income in the process. So I prefer to own OARC because that pays me monthly dividends so I can live financially free. And then I get the extra movement out of selling puts in ARKK. Same with Tesla. I own TSLY, and then I had sold puts on Tesla. When Tesla was down at 100, I sold a put on Tesla at 50 to get that extra movement and $800 of premium. If you want to see that past video on Tesla and how I used options with Tesla, they're in my short section, and I have one on my long section. Go find that on my wall if you're interested. So this is why we can't just live out of TSLY and Apply, even though they're really great stocks, because they have 50% maintenance. And that's why I choose Cornerstone as my preferred vehicle to amass my wealth, because not only does it drip its dividend at NAV, it has a 21% dividend, and it matches the indexes, so it gives you days gains potential. But it also has 30% maintenance. I already showed you that 30% maintenance number. So that means that for every 1,000 I put in Cornerstone, only 300 is taken up, and I have 700 left to play with. That 700 gives me times 4. If I have 700 more available for withdrawal, that gives me times 4 purchasing power of 2,800. So this is how I'm living financially free. I'm not only buying things that are tied to the indexes and then using some margin to get extra performance out of my account and extra income, which my 100,000 per year in dividends pays back this margin in less than 3 years, which is quicker than real estate. I'm also trying to live financially free out of my account. That's the highest truth. A lot of channels out there push passive income names, dividends that go sideways, dividend funds that go sideways to down, but you don't really get ahead because you don't get that performance. I'm getting both performance and income, and keeping my available for withdrawal high, this cushion. So when I travel the world out of my E-Trade account, which acts as a checking and debit account, I have a credit card and a debit card. I can just withdraw money as I please. I can travel, buy food, buy a house, buy a car. As you saw, I just got my car in my short videos. If you see that in YouTube, I qualified on my short video section in YouTube. I qualified for my car using just dividends, and my deposit comes out of my available for withdrawal number here. But this number has to be high enough for you to live on. And it won't be high enough if your margin maintenance is too high. If you buy too many TSLYs or you buy too many USOIs, like some other channels promote USOI, 30% dividend, but it's 100% maintenance. If you buy too much high maintenance names, too many of them, then you have no equity left. If you don't have any equity left, you can't withdraw out of your account and you can't live financially free. Also, if the market falls 10% or 20%, you're going to be in a margin call. The way I avoid margin calls is by buying low maintenance names. So again, if you need help with margin, email me for my e-guides at akintodd48@gmail.com. I not only teach you how to use margin, but I have a few chapters. It's about 7 or 8 chapters, my e-guide on margin. It's not only about how to diversify your portfolio properly with margin and how to get the most income out and how to protect with hedging and how to get the most out with lower maintenance names. It's also a guide on how to teach you how to just check your emotions, check your spending habits outside of your account. It's a complete total guide to living financially free using margin. And Cornerstone is just my vehicle of choice to get the most out of my account and to live financially free. You just have to play Cornerstone right because it has that rights offering every year, and you have to learn how to ask for the drip properly. So that's the deal with Cornerstone. If you need help with Cornerstone, email me for my e-guides at akintodd48@gmail.com. Also, when you buy my e-guides, I send you to my Discord server for free, which gives you alerts to the Cornerstone rights offering. So When you buy my e-guide, it's really more of a plus to get my phone number out of it, because we can talk anytime about anything that you want. All of my people who bought my e-guides, if you ask them, I'll talk to them as long as it takes for them to get their questions answered. And I really love doing it because this is my passion. So that's really the benefit of buying an e-guide, is you get my number and you get the Discord access, but also you learn how to use all the perks of margin, all the little tricks of margin to live financially free. So that's how I scale my income up safely every year using margin. I tie it to the indexes, yes, and I don't get too gung-ho in any one name that's not the index, like a TSLY, but then I also watch those maintenance levels, because that's how you not only actually deter some of your risk out of your portfolio, because high maintenance means higher risk, but it's how you squeeze the most income out of your portfolio, avoid more margin calls out of your portfolio, and how you can withdraw out of your portfolio and live financially free. So I hope you enjoyed the video, guys. Email me at akintodd48@gmail.com if you have more questions, or if you want to talk more in depth about anything in this video, and leave comments in the section below if you have any other ideas of videos you want me to cover, and I'll talk to you soon. Thanks.